The strength and the weakness of the dollar has a direct impact on Bitcoin and therefore the entire crypto market. In fact, there's an inverse relationship. So when the dollar is increasing in strength, Bitcoin is going down. And the reverse is true. When the dollar is decreasing in strength, Bitcoin tends to be going up. So we're going to take a deeper dive into that. And there's also two major announcements happening next week in the US economy, which can really coincide with big trend reversals. So we want to be really aware of two particular dates. So if you like today's video, like, subscribe, hit the bell notification. Now let's look at the inverse relationship between the dollar and Bitcoin. What we're going to look at here is the dollar and Bitcoin and the inverse relationship. So I've taken the last almost 18 months, it's pretty much November 2021. And what you can see at the top is the dollar has been overall increasing in strength. That's the dollar index. And Bitcoin since November 2021 has been decreasing in strength. So you can see there's a opposite relationship. But more recently, the dollar has been losing some strength, right? It's been a big movement to the downside. And what has Bitcoin been doing recently? Well, it's had a nice price surge. In the grand scheme of things, it's not that big, but it has had an impact in the market. So the dollar's been moving down and Bitcoin has been moving up. And this is a really, really key relationship because the dollar seems to be the lead domino. So if we can see what's likely to happen with the dollar next, then we can predict with high probability what's going to happen with Bitcoin next, because we want to see what is the likelihood and then bet in that direction. But also keeping in mind that Bitcoin is the market mover and the market leader in the crypto space. And what Bitcoin tends to do, everything tends to follow. So that's going to really help us look at what's likely to occur over the next 2 months, which could have an impact of the rest of the year. Now we're just going to quickly look, before we look at the charts, at trend reversals, but we're going to look at two major news announcements. Now these are already baked into the price, but you want to be really aware of these two dates, which are happening next week. The first one is the Fed announcement. The FOMC, the Federal Open Market Committee. What is it and what is it for? Well, it determines the direction of the monetary policy by setting interest rates and directing open market operations. In other words, it's a major piece of news and it can coincide, and it does in the financial markets, with trend reversals. So that's happening next week on the 1st of Feb. Now on the 3rd of Feb, so these are both happening on the same week, is the jobs report, also known as non-farm payroll. And the key thing you want to take with the jobs report is, again, it's a massive piece of news and it can, and it does make the market very volatile for that period of time. But again, trend reversals tend to happen around these particular dates and reports. So it's a release each month, first Friday of each month, or employment situation summary, and can have a significant impact on the financial markets. The jobs report provides the most comprehensive picture of non-farm employment in the US. And US currency, the dollar, is referred to as the base currency. Like most crypto is pegged against the US dollar. So it's a really significant time next week. So we want to be really aware of that. So what we're going to do next, we're going to actually dive into the dollar index because we want to look at the technicals. So here I've pulled up a chart on a weekly data for the dollar index. And if you're familiar with Elliott waves, markets tend to move in 5s and 3s. And we want to be really, really aware of that. And what we've had recently since January 2021, so the last 12 months, the dollar index has been really surging up. We've had this wave 1, wave 2, a very impulsive wave 3, a nice corrective wave 4, and a final part of a wave 5. We're confident that this is a wave 5 because there's been a big move to the downside, which has exceeded this swing low, right? So that tells us we're probably going to be on a longer degree correction. So what we're going to do now is look at what is this looking like and what will the next 2, 4, 6, maybe even 8 weeks look like in the markets. And also, again, keeping in mind those two major news announcements. So we're going to go into a bit of detail here. So I just want to quickly pull up some momentum indicators on the weekly chart as well. And what we have on our hands over here is a couple of big pieces of information. One is that the weekly momentum is strong oversold. What it tells us is the downside is limited. And basically what this dashboard does, I've created this dashboard, is it interprets all of this information and puts it into simple English, right? That's what the dashboard does, the purpose of it. But basically what it's telling us is there's a fast look back period that measures the rate of change and it's oversold. That's what this tells us over here. So that tells us the downside is limited. A slightly slower look back period is also oversold. So that's why it's strong. So that tells us that we're probably at or near a weekly low. So actually the bias is that we're probably going to see some type of movement to the upside. And we're going to break this down in a bit more detail. Because now what we're going to do is we're going to go into a daily chart with the dollar index. But before I do, if you want to utilize this trend identifier dashboard, we've actually now created a 30-day trial where you can test it out for £1, check it out, and it can be a really powerful resource. And I've given some really high-level training with this as well, so you can combine it with your current strategies. As a standalone, it's really, really powerful, but when you combine it with some technical information, pattern, price, and time, again, it's in the link below. Check it out. Very, very powerful indeed. So now what we're going to do is we're going to dive into a daily chart with the dollar index. And what we've had pretty much since September of last year is the dollar's been losing strength, right? And we can see this over here. From this high, it's been pretty much just down. But is there a pattern that we can see? Now, if you look at it, it looks like a nice impulsive 5-wave structure that gives us very valuable information. So let's just look at this. We've got a nice wave 1, a wave 2, what looks like to be a very impulsive wave 3, a corrective wave 4, and it looks like the final parts of a wave 5. Now, if that's the case, after a 5-wave move to the downside, typically what occurs is a 3-wave move as a minimum to the upside. So even though it's unlikely that this high is going to be exceeded on the dollar index, we are likely to see some type of correction, which will have an inverse impact on Bitcoin if this occurs this way. So now let's just zoom in like this. So I've done what's called Fibonacci time retracements, which is, I'll draw it like this. I'll make sure it's really, really clear. Most corrections take a certain amount of time as a minimum. That's most common to occur. And what I mean by that is, again, we've had this 5-wave move to the downside. Let's just make it a bit clearer so you can see it incredibly clearly. 5-wave move. I've put a question mark here because it's not been confirmed. The price going above this point over here will be the first early confirmation that this low is likely to hold. But we're likely going to get some type of surge like this over a period of around 8 weeks. So the minimum date that we want to be aware of is mid-March. Mid-March is something called the 38.2% time retracement. We basically just measured how long has it taken for this 5-wave sequence to the downside to unfold. We project forward 38.2%, and that's a key date for us, mid-March. And the typical extreme is around 11th of April, thereabouts. So we're talking about 2, 3, maybe even 4 months of upward movement on the dollar index overall. Really, really important. And by the way, if you're not used to Elliott Waves and you want to learn more about Elliott Wave, I've actually created a free 4 Secrets Masterclass. It's the 4 things that I use to read the markets in an objective, logical way. And one of them is Elliott Wave theory, which is how to really interpret fear and greed, that you can see what's likely to happen as a leading indicator, but also that time analysis. That time analysis can be very valuable on how the markets tend to typically operate in a particular dynamic fashion. So what we're going to finish on now is looking at Bitcoin. So again, remember the dollar index has been sideways to down, and we're anticipating some type of 3-wave move to the upside. We got some big news announcements next week. So we're probably going to see some type of reversal, and the bias is on the upside from a technical position. So now let's just look at a Bitcoin chart. Again, pretty much since November as of last year, we've had this nice movement to the upside. It was this movement here. We had this correction, and then we've had this massive surge over here, right? And let's just zoom out a bit so we just get a bit of context with Bitcoin. So when we're looking at this, we can see the market's been sideways to down. A lot's been coinciding with the CPI reports as well. But right now, what we're going to focus on is what is likely to occur next. Now, again, let's just jump back into this. I just want to go back here because this is really, really important. Look how the inverse relationship between the dollar and Bitcoin. Bitcoin's at the bottom and the dollar's at the top. If this holds true for the next 8 weeks and the dollar does gain strength, even if it's a correction, it's still going to be significant strength. Therefore, Bitcoin is likely to see more downward movement over the coming weeks. And that's what we want to be on high alert for. And if Bitcoin moves down, most of the other crypto markets, crypto assets like Ethereum, even more the low caps as well, will tend to also be impacted. Now, what we don't know at this point in time is how significant the correction is going to be. Is it going to take out this low over here and move towards $12,000? Well, we don't know that, but the key price point that we want to be aware of is this over here. This is the closing overlap of Bitcoin at around $17,800. $17,800. So we're expecting some type of top in this region over here. And a correction is due. And we're expecting, again, especially if the dollar index does do a surge to the upside, we are expecting some type of correction from a technical standpoint on Bitcoin. Now, if it doesn't cross into this zone between mid-March and early April, then we're probably going to get a continuation to the upside. But if it does break below here, that's going to be a major sign of weakness. And then we're probably going to see this low exceeded to the downside. Too early to say. The main thing that's quite evident is we might see a bit of sideways to up movement this week, but just be on a high alert. We are in a range of seeing a local top for Bitcoin that may last for a few months. And if it does go below 17,800, then we may see further downside movement. So again, sometimes it's better just to stand aside until the two major news announcements are done. 1st of Feb, which is Wednesday, and the first Friday of the month, 3rd of Feb, for non-farm payroll. And let the market tell us, let the price action tell us what's likely to occur, and then we'll reevaluate the market. So again, with Bitcoin as well, if these lows are exceeded, especially the closing price, and with a bit of strength, that will be the first confirmation that the high is likely to hold. So there you have it. So like, subscribe, hit the bell notification. We're going to keep a very close eye on the market, especially with the key news announcements as well. But business as usual. But again, Wednesday, just be very mindful of being in the market, tying your stop losses, or just stay out of the market. And the same as Friday as well. Let's finish with a quote from my book, which you can now also download for free. Is in the link below in the description. Let's go with chapter 1. This is important. This is important when it comes to trading. If you've got the edge, place to trade. But again, tight risk management as always, because you're going to find 10, 20, 30% of your trades make around 80, 90, maybe even 95% of your profits. All right, so Michael Jordan, he said this: I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. And if you can learn that from Michael, well, then you can succeed in the same way.